Warren Buffett has been quoted having two rules on the stock market. Rule number one, don't lose money. Rule number two, don't forget about rule number one. Right now, we're adopting this Buffett philosophy, and we think it holds for very good reasons. This doesn't mean that we shouldn't take speculative bets that are well calculated, that we think can make money. It means that we should avoid gambling, that we should avoid taking a bet that we know has a significant chance of missing. We want to be hitting our shots every time with accuracy, keeping our money in the pot and allowing it to build. Particularly in uncertain times like this, where we can see an FTX blowout, where we can see a market down 20% year to date, where we can see tremendous pain. We don't want to be experiencing that pain. We would rather experience somewhat lower gain, give up a little bit of upside to prevent losing money. Ultimately, that's the portfolio construction we've talked about on this channel that is allowing us to navigate through the various possible environments we get. We've talked a whole lot about this portfolio construction. There's a lot going on the past couple of days, so let's talk about that and how we're going to navigate that. Russian missiles in Poland. This is probably the biggest thing that's impacting markets today. We saw quite a dramatic move in markets, roughly a little over 1% move into red territory, blowing out the PPI gains that really didn't make a whole lot of sense to me because it was obvious that those were going to come in lighter than expected given where CPI was. Simple as that. Russia has not fired more missiles throughout the entire war since the day they launched the war, except for today. That's quite strange, but it just so happens that today a missile landed in Poland. Obviously, I get it. Reports are early, whatnot. But I find it interesting nonetheless. Additionally, it seems that Russia's war doves, the people trying to get calm and peace and negotiation, seem to be the ones getting poisoned. Okay, let me describe this for you. Roman Abramovich, multi-billionaire, lifelong friend of Vladimir Putin, owner of Chelsea Football Club, was negotiating with Ukrainians earlier on in the war, end of March, and was poisoned. Skin peeling off, eyes swollen. Lavrov, Russian defense minister, goes to G20. I didn't realize Russia was going to go to G20. Last I remember, they weren't going to G20. Putin wasn't going to G20. Somehow this guy went to G20. Why would someone want to go to G20? They want to talk to the people at G20. That is de-escalatory. That is peacemaking. That is talking. Guess what? He lands. He goes to the hospital for a heart condition. Sounds to me like another Russia war hawk poisoning, or rather anti-war dove. So I think it's more likely than not this is an escalation that we're currently experiencing. Obviously, anything is possible. We've seen plenty of stuff happen that have been bizarre. Nord Stream 2 blowing up. That was probably the British, based on just how things shook out. Now we've got a missile in Poland. Still early. We're going to have to let this develop. But this has the potential to shake the market, as we saw today. We can't be catching ourselves offside. Right now is a very difficult environment. We've got plenty of people racing to jump the gun on inflation peaking. We know obvious reasons why this might not be the case. Oil prices rising, labor supply still very tight. There's various reasons why this might not be the case, but the market is quickly trying to reprice something. So rather than trying to build on that repricing that is already occurring, how about we be a little more cautious? I think this is the correct time to be a little bit more cautious and to just not lose money. We don't want to have any positions that are down right now. We want to keep everything tight, keep everything in the pool, because things go south, we'll be in a very strong position. We want strength. We want a calm stomach. We understand the environment is very difficult right now. We understand rates are going to be high for a long time. So that means growth is probably not going to be there with rates high. That's just the way it works. And maybe when things are real bad, when earnings are coming down, because yes, there's a lot of crap blowing up. Yes, there's a lot of crap going to zero, but there was a ton of crap way up there, way too expensive, And that's just now starting to come down and correct. So we've completed phase one, but there might be a phase two that has a little bit more to do with falling earnings, recession-like environments, not just rates, not just difficulties getting capital, but actual effects on statements of cash flow that decrease and therefore should decrease valuations. Just, you're buying the stream of cash flow. You're seeing the businesses that have no cash flow get hit now. Well, the businesses that do have cash flow might experience a little bit less. That is something that you have to be conscious of. And then you've got a possible war making people pissed. I think it's no surprise. Russia a couple weeks ago said they were going to give Africa free grain, and this missile landed on a Polish grain field. It's just very weird. And sorry, 20% on the phone. It's just very weird, and I think warrants defensiveness. So that's what I'm doing. That's what I'm preaching here. And you do what you want. I'm here for questions, happy to provide answers. And if you want full service management, you can go to leftskewed.com. That's LEFTSKEWED.com. So that's today's video, and until next time, peace out.